Yes, so COVID-19 in terms of impact on our business. Back in February, everyone was extremely concerned about the potential impact COVID-19 would have on our business. Moving forward now into the month of October, we are, I would say, very blessed with the outcome. We've had a tremendous number of new projects green-lighted. We're in the ground now for in Ottawa specifically for almost 3 million square feet of e-commerce driven industrial, which very much has been accelerated in terms of the demand for that certain asset class by COVID. So in Ottawa, we've been very, very fortunate. Across our other markets, likewise, we're seeing continued explosive growth on the e-commerce side, which has resulted in a number of projects being greenlit and accelerated, ranging from multi-million square foot buildings down to several thousand square foot conversions for last mile delivery and everything in between. So from a broccolini perspective, we're in great shape. And likewise, not so much in the Ottawa market, as our residential footprint here is very small. But in our other markets, Montreal and Toronto, the timing for us has been wonderful in the sense that all of our residential development projects had either been long launched and had hit those 60, 70, 80% thresholds in terms of unit sales to allow us to break ground and move forward seamlessly, or the projects had yet to be launched. So we were able to delay the launch until the time, the timing maybe is a little more appropriate. So for us specifically, we're in great shape and very much active in all of our markets, Ottawa included.
So asset and property management has always been about maintaining the asset. That's a given. But I think if there's anything that's been proven in the last 6 months, the focus has now shifted to maintaining the business support avenue. Our tenants are number one asset within the building, and I think that myself and a lot of other people in my sphere have come to learn that it is not a secondary level of focus that we need to have in our business. It's absolutely the primary, especially over the next 12 to 24 months. We absolutely need to be focusing on how we are providing the right assets for their business models and how we are fostering their businesses so that we can both succeed for the foreseeable future.
How hasn't it affected our business? Firstly, we've all been working remotely and on rotating schedules for the last 7 months, and I would argue that most of us are ready to get back. It is amazing how quickly we shifted from a full office workforce to a remote workforce almost seamlessly overnight. Rent relief discussions and secret applications have consumed a large part of our staff's time, starting in the middle of March, and will likely continue well into 2021. We've had to look internally to cutting costs without cutting staff to ensure that we can manage our way through the pandemic without impacting the service we provide to our clients and tenants. While we all thought a lease was already too long, it didn't take long before we've been met with COVID delay clauses and pandemic language that creates uncertainty for timing on possession and commencement of a new lease term. We've worked to keep our forward-facing activities in the market, however, have had to shift to online Zoom calls to ensure that we are keeping in touch with our colleagues and tenants. We've been working with our tenants to ensure that curbside pickup for consumers and third-party pickup services is seamless, as well as supporting increased patios and social distancing measures required to keep the doors of our retailers open and the lights on in our centers. Everyone believes that there is an end in sight, and we are working to ensure that our position in the market and our properties are ready.
COVID has had an impact on the market that we're in, which is primarily located in the technology section of Ottawa. It's called Canada North. And what we've seen is that occupancy of the buildings, as is much the case, throughout commercial office spaces, probably at 10 or 15%. We've been very fortunate in terms of our tenant mix being primarily technology, in that it seems that the technology industry has, weathered and is a more stronger sector of the economy than others. So we've been fortunate in terms of having tenants, for the most part, that have survived the downturn in the economy, have survived COVID. I guess the largest impact for us would be, the small ground floor retail component that supports the office space. They've struggled in that, the buildings are very lightly occupied, and they will continue to struggle up until a point where, we start to see some return. So in that respect, we've been extremely fortunate. We've continued to collect, well north of 95% of our rents. And we continue to see, renewal of our leases, albeit for a shorter term. But we are seeing lease renewal from our tenants. And we have recently signed some new leases for tenants looking to for new premises to occupy. So we've been very fortunate.